Hello, fellow traders. 'Tis I, the rumpled one. It is Monday, March the 26th, the year 2018. FOMO, or fear of missing out, or hairy hindsight. That book, Thinking in Bets by Annie Duke. That I couldn't remember. I couldn't remember the title yesterday in yesterday's video. But yeah, Annie Duke, Thinking in Bets. I was reading it a little bit last night, and I was also trading yesterday after I made the videos, and I realized something. Fear of missing out. I think that might be my biggest flaw when it comes to trading. It's really not about losing, it's about not winning. And yesterday, or I should say today, I'm doing one of those hairy hindsights. I am kicking myself because I was long the euro yen. In fact, somebody asked recently, what's my favorite pair or what's the best pair? And I said euro yen. And I looked at the charts and I said to myself, I really should buy the euro yen. I should be long the euro yen here. I should be long and I should just hold on to that sucker. Well, what happened? I got in the trade and it was basically kind of just waffling. I mean, it was, I don't know, probably still in the New Zealand session, just getting into the beginning part of the Asian session. And so I made some money, but I let it go. I didn't keep a piece in. And if you're looking at the charts, you all know the euro yen shot up like a rocket. Yeah, that's hairy hindsight. That's what happened. But in the moment, I really wanted it. And I wanted to be in that trade because I didn't want to miss out. But you see, that isn't the reason you should enter a trade, because you don't want to miss out. And so reading that book, at least that one part, something about it helped me crystallize that. So Annie Duke's Fear of Missing Out. I'm almost done with it. I'll probably be done with it sometime this week, so I'll put up a book review, and I might even do another talk about it more during these trading videos. But anyway, and one other thing about fear of missing out, you see, if I had gone long and I put a stop loss in, and let's just say I got taken out of that trade, and then it turned around and screamed like a banshee to the moon. Well, I'm just going to have to admit it. I would be, pretty PO'd. Okay, I'd be ticked. I would really be ticked. Hey, you know what? No pun intended, but considering, we call every movement a tick. Yeah, I'd be ticked off because, I got ticked right out of that position and then only see it to reverse. And I know probably every one of you have experienced that if you've been trading for any length of time, where you get in a trade, you get stopped out, and then it goes in the other way big time. Well, I guess there's a lesson to be learned there, and maybe it's, maybe you need a wider stop, smaller position size. But I think the real lesson to learn is that it doesn't matter. You shouldn't care. That's trading. I mean, that's the attitude. You're not supposed to have emotional reactions to being stopped out. And you're not supposed to have emotional reactions when you drain the bank either. But, we're human. So we're usually going to have emotional reactions. But the thing is to put them in check. And so I guess the part of the book that made me realize it was when Annie said, when you win, that's not the time to celebrate necessarily. That's the time to go back and analyze what you did to see if you could have done it better. And on the other side of the fence, or the other side of that coin, is when you lose, when you analyze, you need to see if it was poor skill or just a bad beat, a bad break. Just, luck. You just didn't have luck on that trade. And so that's what you have to do. You have to really dig in, put the emotions to the side, and really look at your trade objectively. And maybe something you could do is maybe you could have a friend that knows almost nothing about trading, and then you try to explain it to them in detail. Because, see, you're going to have to explain every little piece to them because they don't have a clue what you're talking about. Maybe you could explain it to your dog or cat because, of course, they're not going to understand. But by explaining every little detail, you might uncover something. So let's just take a look at the chart. Well, you can see here dollar Canadian is out of the wick zone on the week. Something to be expected. Last week it exited the wick zone to the upside, came back in and exited to the downside. So here we go. Dollar Canadian was in that wick zone and now it's back up and out. But here, let me just go ahead and show you. There it is. The euro yen. Yeah. If I remember correctly, I was trading it somewhere around the 129.30 to 60 area. So anyway, that's it out there for everybody to see. My the one I missed, the one that got away, and that would have been a whopper too. I mean, look at that. That is a whopper. Okay, but just to let you know, I was also in the dollar yen somewhere in this area here. I think in the 80s. And so I picked up a few pips there overnight, but not anywhere close to that one. So I should have maybe exited the dollar yen and stayed long the euro yen, but that's Harry hindsight. I love that Harry hindsight. That's so funny. Anyway, so I have to analyze those trades. And actually, though, when I looked at it, I think I believe I looked at the month and I saw that there was all this room down here, and it's just like, yeah, you don't want to wake up to see another big red candle. So, and since I was, outside of that monthly wick zone, I wasn't outside of the weekly one though. But that's how I looked at that trade. You have to, you know, anyway. So we see here dollar Canadian to the upside. And a peek on the daily. Once again, you see here it exited that area. Well, we've only got 21 pips over the open as opposed to the euro yen. But yeah, I'm gonna kick myself on that one. You can see we've got some nice trading ranges here, some really nice ranges. And the reason is because, just to let you guys know, I guess there's some people out there that I think I'm like the know-it-all, the be-all, end-all when it comes to trading, some great guru. No, I'm just a trader like you guys. I mean, yes, I can program indicators, and yes, I can, run statistics and all that. So I might be able to do a couple things that some of you can't do, but there's probably a few of you can maybe even do it better. I mean, that's just, that's just life. But as you can see here, you just trade. That's it. That's what, and then you take your chances, and things will either work out or they won't. And when they do, figure out how to do it better. And when they don't, see if it was you or just bad luck. And as you can see here, the buy zone, once again, dollar Canadian. We wouldn't even be looking at dollar Canadian that time of day. It'd be more likely sometime here. Entry. There was money to be made. Gave you a second chance, even though the H1 was red. Didn't get below the open. Pulled back up. You take your chances. You see, there would have been a payoff. And then see here, you had one more chance and another payoff. And that's hairy hindsight, because you see, these lines, well, they don't move. So how is that hindsight? Because if you take the trade, you can make it happen. It's like I said yesterday. I put this out there. You've got the tools. You know the stats. All you have to do is trade it. People go, well, why don't you do an EA? Why don't you do an EA? Blah, blah. Anybody who knows me knows for years, automatic trading has at least, I think, somewhere between 7 and 11 things that can go wrong. And that's why I don't put EAs out there for the general public. I want to save you guys from getting burned. Okay, here we go. The rat zone, high, and the price came out. See there, you had a wick zone in the rat zone. H1, and it came out. Money to be made. We're back in it. Maybe another opportunity coming up. Dollar Canadian took out the pivot because the pivot was really close to the open. Price action. Once again, trading at the line with the candle color. Sometimes you get a lot. Sometimes you get a little. I mean, that's it. Once again, trading with the candle color at the line. You can see here, there's still more pips. You can either do sweet spot lines. You can do previous days lines. You can do the wick zone. And you can see here, once again, price doesn't like being in the wick zone. And what happened? It came out. Just like every other day. Here we've got a possible hole. We do have a holo set up right here. You can see it peaked out and jumped back in. This one was a little profitable, but you can see here, this one you may have stopped out, or you may just be hanging in the trade and say, well, maybe it won't make a new high. And of course, you can see here, hey, I just see something here. I've cranked up the, might have to change something in this indicator, because you wouldn't want to lose more than you have. I'm fooling with this account here. It has 1,000-to-1 leverage. So I think I'm going to have to check something in the code here in case somebody else is using 1,000-to-1 leverage. And I just turned on the computer a little while ago. And as you can see here, once again, the bid got above the valley of the ask. And you'd be up about, it just popped up there, maybe 4 or 5 pips, because you have to account for the spread, but nonetheless, there was money to be made. That's it, fellow traders. So, it's not what you trade, it's how you trade it. TheRumpledOne is going to go drain the banks.